And before beginning, I would love to hear from you. If you are seeking financial advice or have questions, I've put together a very short survey. The link is in the description, and I'm really interested to hear what your single most important financial advice question is. I have for you folks some terrific financial advice on how to use investment accounts. Investment accounts are one of the most important features of basic financial management. They propel your savings forward like magic regardless of what assets you want to hold in them, but they are super complicated. There are different types, all with different features. I'm going to cover the major ones and highlight how they're going to make you money. The accounts even have qualifications. Not everyone can use each of them, but you likely qualify for at least one type if you didn't already know that. The first investment account I'm going to cover is the one everyone has heard of, the 401k account. The 401k is a self-directed account sponsored by your employer. That is a really confusing sentence. It means that you can't have a 401k unless your employer has it all set up and lets you contribute to their plan. That's the employer-sponsored part. But you have to set it all up for yourself, contribute, and pick your investments. That's the self-directed part. Everyone has heard of the 401k because the contribution limits are pretty high. People are able to suck a lot of money into these things through time. It's the benefits of the 401k that are really mysterious. It's never covered in school. You didn't hear about it from a college professor. You didn't study 401ks if you went so far as to get a PhD. You put money into the 401k pre-tax. This means the government leaves you with a lot extra to invest with early on. Not only that, the gains on investments on the account go untaxed. This is a big deal. No capital gains tax, no tax on dividends, no tax on any interest. You should be starting to see why people love their 401k accounts. If you are in the 25% tax bracket, then you instantly have 33% more money to invest with. What? Now that money is going to grow and grow without the government touching it. Yes! Finally, when you take the money out of the account, you pay some tax on it like it's earned income. Here's the third likely benefit. You're aiming to be taking money out of the account when you've retired. You're no longer working. You no longer have an income, so the money will be getting taxed at lower tax rates than were applicable when it went in. That's the 3 wins for free. You do nothing. The next investment account I'm going to cover is the IRA, or individual retirement account. There are 2 main flavors of the IRA, and you can't really do both at once. They're called traditional and Roth. Oh man, it gets so complicated. The financial advice holds the traditional IRA is a heck of a lot like that 401k account I just told you about. The major difference is you don't need an employer to sponsor any plan. You set it all up yourself at a brokerage. You can also only contribute about a third as much to an IRA as you can to a 401k. Money grows tax-free in an IRA just like a 401k. That's just whether the IRA is traditional or Roth. The difference between the traditional and the Roth is how money comes in and how money comes out. Just like the 401k, the traditional IRA takes in money pre-tax. You pay the tax later when you're older and withdrawing from the account. The Roth IRA takes in money after tax, just like the money that goes into your regular bank account. But when you're older, you don't pay any tax at all on the money coming out of the account. Do you see how that's kind of in reverse? The final investment account I want to run through today is the HSA, or health savings account. Not enough people know about the HSA account. They don't understand it. They should. The HSA is actually kind of the coolest account. The HSA starts off a lot like the 401k or traditional IRA account. You get that big pre-tax money flowing into the account. You get all the gains accumulated in the account tax-free, just like every single one of the accounts that I've covered thus far. It's the final benefit that is really cool. If you use this money in the account for medical expenses, and everyone knows they're likely to have tons of medical expenses if they're lucky enough to grow old, and all the money used for those medical expenses doesn't get taxed. What? That is amazing. I want all my money like that. It didn't get taxed up front, it didn't get taxed while I was growing, and finally, it didn't get taxed. That calculation is barely even needed in financial advice. The math will be different for everyone, but we're talking lots of money entering your portfolio for nothing. It really is like magic. The investment accounts are all about these taxes. It's the taxes you have to understand. You have to understand how much you're losing to understand how much you'll be gaining. That is so weird and difficult. Everyone's situation is different. Everyone's numbers are different. Looking far off into the future for things like tax brackets, income levels, and medical expenses is pretty much impossible. You end up guessing. Trust in the basics of it. No one really knows exactly how much they'll be making for nothing by using investment accounts. You can only calculate that in the end. Thanks a lot for watching, and don't forget to fill out the survey in the description if you are after financial advice.